Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my guest is Amresh Singh. You want to start off by just giving everybody a bit of an introduction to yourself, how you came to, doing this sort of business?
Awesome. Yeah. Thanks, Ben. First of all, thanks for having me. Hey, everyone. My name is Amresh Singh. In terms of my background, I have background in mortgage financing and real estate tech. That's what I did for 10 years before I founded Home Abroad. Originally from India, relocated to the US in 2013, working for a big international bank. That point realized, it's not easy for global investors to invest in US real estate. There are a lot of gaps that exist in the market, right? That kind of led to the formation of Home Abroad, and we're really here to kind of streamline the entire process, make it simple and easy for foreign investors to dive and invest into US real estate. We'll talk a little bit more about in the podcast about why US real estate, but that's kind of high-level background. One thing I wanted to touch, Glenn, right? The thing that really makes the US real estate unique, right, is the ability to generate cash flow with leverage, right? That doesn't really exist in most markets around the world, right? So if you think about different markets, right, most people are investing in real estate with cash. The idea is to get equity gain through appreciation, right, is really how you're looking at your real estate investment. But the fact that in the US, you have 30-year fixed rate mortgages, right, where your payment is fixed for next 30 years. The payment is amortized over 30 years. So you're looking at a lower payment every month. You have high rental leads, right? So you combine high rental lead with 30-year fixed rate mortgages, and you're looking at a superpower in wealth creation, right? Which means, rent covers mortgage in most situations. That's why we have specialized loan products where we are not looking at your personal income or assets. We are looking at the rental income of the property to qualify you for mortgage versus your personal income or assets, right? Which again is unheard of in most markets around the world, right? So that, realization, is very unique. And most global investors don't know that US real estate as an investment asset with that superpower not only exists, but is available to them. So that's where we kind of really focus to kind of spread that education and awareness. This is, Glenn, such a, common thing and, makes sense, right? But again, it's something that people just don't know about, right? The wealth building cycle, of real estate, right? Where you buy one property, you are putting in 25% of your money to buy 100% of the property. Property takes care of itself from day one, provides you additional passive income or cash flow on top of it, right? But 3, 4, 5 years down the line, property appreciates in US dollars. You take a cash out, refinance, right? Again, which doesn't exist in other markets around the world. I don't know about Canada, but like there are other markets where cash out is not allowed, right? So you can, in the US, you can tap into that equity, take that cash out, put a down payment on next property, and the next property takes care of itself, right? So this thing is so amazing and so unique, and it's really a wealth building tool that we are trying to make more accessible for everyone in the US and outside the US.
Oh yeah, great. And I a lot of times when I do those applications on a cash out refi, it often asks what you're planning on doing with the money. Does it really matter what I put in that box? I always say I'm going to buy more property, but I'm like, I wonder if I just said I'm going to go buy a Lambo, if they would be upset about it.
Yeah, so they're trying to, from a lending standpoint, what we're trying to assess is, that cash has some, you're not trying to use that cash for something that is not in the set rule of boxes that you need to take, right? So in most situations, I'm buying another property, using this cash is a perfectly good explanation.
Well, that's actually what I'm usually doing. Like that's the whole point is to grow this that you were talking about. I live off of my income from it, but sometimes you sell some, but the idea is to grow this out, right? Or unless that's the intention. Like sometimes we do flips, and that's the whole plan, right? From the start.
Absolutely. Again, like talking about Canadians specifically, right? We do find fix and flip interest, right? Because Canadians can drive across the border, right? Look at the properties. There's that much more kind of hands-on or working on the ground, requirement, it's usually associated with a fix and flip. Canadians can fulfill that, right? But I've seen Midwest US to be, really an interest area. Ohio, Cleveland market, Michigan, Tennessee. So the Midwest, for obvious reasons, the property prices are low, the property taxes are low, rental yields are high, right? So that attracts a lot of Canadians. But I've also seen Canadians investing in, so I've seen from buying $100,000 property, right, in Midwest, right, or $70,000 for fix and flip, right, to buying $2.5 million, condo in Hawaii for a short term rental, right, or $2 million second home in Miami Beach, Florida, for short term rental, right. So it's very diverse in terms of kind of investor persona, what they're looking to do, right? But we have investors across the spectrum looking to, either do a fix and flip, like which I call, turnkey investors who are looking to value, investors who are looking to get value out right away, versus, investors who want to park their money in USD, they want to get cash flow, but they also know they're going to get a good return on their cash invested from their property in long term as well. So it's a mix, high level.
I have more free content. So if you're interested, I created a PDF guide and a video to go along with the PDF guide to complement it. And what the guide is all about is the 5 most common mistakes that Canadians make when investing in the United States. So if you're interested in this free guide, go to CanadianInvestingInTheUSA.com/mistakes. And let's go back to the podcast. And it's free. Getting paid in US dollars, especially if you're still living in Canada, like I still live in Canada. Right now, getting paid in US dollars is, you're getting an extra bump.
35% higher. Your income is 35% higher, so to speak. I go to Canada often. I say Canada is 35% sale for us.
It's on sale right now.
That's an added advantage if you're a real estate investor. And think about it, right? You're a real estate investor. You're getting cash flow in USD, which is 35% higher, right? Your property is appreciating in US dollars, so it adds to the return that you're making. And it's not only for Canada; it's also for why other global investors want to park their money in the US, right? US, and USD being the reserve currency of the world, right? So it shields you from currency risk. It doesn't, if you, it helps you with the currency depreciation that might exist in your local market. US real estate is very robust. If you think about US real estate, 80% of the homes sold are existing homes getting sold, right? But I don't know about Canada, right? But I think Canada is similar. But like most places around the world, it's new builds, that have a higher share in terms of units sold, right? So it might create an inflation, a property bubble, right? Which by default, by the structure it is in the US, doesn't exist, rendering it a stable market as well. So the fact that the market will crash in the US from a real estate investment standpoint, the probability is very, very, very low. But that also gives global investors a lot of confidence and that stability that attracts global investors putting their money and parking their money in the US.
Yeah, that makes a lot of sense. Yeah. Well, not sure if we want to get into politics, but that you just brought up so much stuff.
It's a hot topic.
There's a lot of world politic issues right now with that changes a lot of that complicate a lot of things, right? But
I do believe, and just to kind of briefly touch on it, Glenn, right? So every administration has their own agenda, their own policies, right? But one thing I like about real estate is a long-term game, right? And short-term policy shifts, changes doesn't really impact your overall strategy if you're in real estate for a long term, right? I don't see US shutting itself from foreign investment, right? It's current administration or any administration for that matter, right? It's a capital market, right? It's a capitalist economy, right? And free market would prevail, right? So I don't see restrictions in foreign investments coming into the US. The short term panic due to tariffs, etc. I do believe it's a short term measure for current administration to get what they want, right? But if you are in real estate for long term, all these short term fluctuations shouldn't really impact your long term plans.
What mistakes do you find that, people from other countries, Canada, even anywhere around the world, make when they're investing in the United States. Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
I think, the most common mistake, that I see, is not doing enough due diligence on the property they're buying. They like the area that they, like making sure if you are, property taxes, HOA fees, those things which you don't really think about upfront, right, can really add up and eat into your cash flow, right? So just making sure if you're buying a property that has an HOA, it's not an outrageous HOA fee. Your HOA allows you to rent. Sometimes we have seen where the customer comes back, love the property, put in a purchase contract with us. We started the loan app process, and we found out the HOA doesn't allow for rental properties, right? And then we had to, what was the real estate agent doing in all of this, right? So we cannot come into those situations and those scenarios. So we do ask our investors to, just make sure, ask the right questions to the real estate agent that you're working with, do your own due diligence, right? Make sure that, you go with the right loan program. I've seen a lot of, taking the Canadian example, right? A lot of Canadian banks offer mortgages for US real estate purchase as well, but it comes with its own terms and conditions. They're looking into your income, your assets, they're giving you an ARM product, right? So consider all of that before you finalize or choose a loan program that best suits your need as well. A lot of times we come into save deals, where they kind of went in. The Canadian banks want to capitalize on Canadians investing in US real estate. They've launched a product, but they don't really know about, the ins and outs and intricacies of, how this works, right? And a lot of the time we have to jump in to save the deal. And when the client comes to us and say, oh, really, this was so simple. Like all we need is really proof of assets to know that you have enough money to put down and closing costs, right? And the appraisal. That's really it. If the rental income comes out to be where it needs to be, you are good. And if it does not, we have programs to solve for that, right? Your loan to value will go a little bit lower. Your rate will go a little bit higher, but we can still do the loan. So it makes the documentation process and the loan process much more streamlined and simpler. And sometimes people just don't know, and they sign up for something that at the end of the day they realize they can't fulfill, right? So that's something I always, want our clients just to make sure that you are doing your due diligence, you know what you're getting into.
Oh, totally agree. And I see that so many times people mess that up, and they just assume that because they got 80% leverage on a purchase in Canada that they're going to get 80% leverage in the US, or they just make all kinds of assumptions. They assume that the selling realtor is telling you what this could resell for at some point, but they're motivated to sell the house for and so and people don't check their own numbers. People trust too much, and they need to, just like you said, they need to verify. Trust but verify. You need to go through
exactly
and make sure that those things are going to work. If they give you rental comps, run it by a property manager, make sure that that's legit, right? Because apps are pretty good, and they're good to get your initial due diligence done. But Zillow lost a lot of money a few years ago because there were some mistakes in there. So you do your own due diligence, verify all these numbers, make sure that you're doing what you're doing. I totally agree with that.
And cool thing about it, just to add one quick thing on what you said, Glenn, right? So cool thing about we do something called a DSCR loan, debt service coverage ratio loan, right? So good thing about this loan is upfront whether this property is going to work for you or not, right? Because as part of your loan process, we're going to order an appraisal. An independent third-party appraiser is going to go out and give me a conservative market rent, okay? That this property is going to rent for, say, X dollars on a conservative basis, because appraisers are always conservative, right? And we will use that rent to see if the property is going to break even for you after your principal, interest, taxes, insurance, and HOA fee, So the fact that at that point, you know what you are getting into, you know whether the property is going to break even or the rent is going to cover 80% of my mortgage or 90% of mortgage, or it's going to generate me 25% additional cash flow after paying for the rent, right? So you know that number upfront on a conservative basis. The market rate might be higher, right? But at least from a conservative basis, you know that number. And at that point, the only thing that you have paid for is an appraisal fee. And if the numbers don't work out for you, you can back up, at that point, right? So that kind of should give you an added sense of comfort that what I'm getting into versus, kind of getting into this with that blind spot.
Yeah, no, exactly what you said. When you, if you're the kind of person that is going to skip on some of this due diligence, by putting a loan on it, the bank is going to do at least some of the due diligence for you, because they're going to cover their own butt, which is in turn your butt.
Your butt, yeah. It's a win-win, right?
Yeah, it's a win-win. It's gonna align things up. Anyway, this is a great conversation. If people wanted to find out more about Home Abroad, or how do they find you or the company?
Yep. So they can go to our website, www.homeabroadinc.com. That's homeabroadinc.com. Or they can shoot us a quick email on contact@homeabroadinc.com.
Awesome. So much information. Well, I appreciate you coming on the show, and I appreciate you sharing all your knowledge and expertise with everyone.
Awesome. Thank you, Glenn. Thanks for having me. I appreciate it very much. Take care now.
That was a nice video. Bye.